We have someone reconciling our things all day, every day. It's too late by then. If you've made a mistake, you can't catch it.
And what are the key numbers you're looking at once a week?
Cash. That's the only thing I have my eye on ever. And I've actually set up my business to a point where I don't even, because we only use debit cards and because we don't have credit and because we only use cash, and if we make money, it goes into an account as cash, and if we spend money, it goes out of an account as cash. I know what we're doing on cash just by looking at that number. Because if we're going up, it's going up. If we're going down, it's going down. But when you have credit cards, multiple accounts, and all of this shit, it's all over here and it hasn't hit here yet. And I don't like the idea of making a mistake there, so I don't use it. So I engineered the whole business so that I can just glance at different things and sense the whole, I can sense like the health and the pulse of the entire machine just with a couple of glances at different things.
So you're just looking at the bank account level at the end of the day and watching that number consistently rise. Sure, it might have any, but it overall consistently rises. Is that it at a high level?
Well, that is just checking that you're going to stay alive, right? That's just the start of it. That's my biggest concern. Because if we do run out of cash, we will cease to exist, right? So that is like the survival number. And we can go backwards on it, but not for too long. And then after that comes like looking at your ads, because that's where most of our expense is. And what our ROI is on that, on cash and on revenue. And I want to make sure it's at least 20% on cash. And then I want to look at, my overheads and my payroll and all of those things and what those are and how those are impacting it. And then where we should be spending more money, where we should be spending less. Constantly looking at it. Every dollar should be going to work in the most efficient way possible.
So if your course is $2,000, hypothetically, you're happy to spend, hypothetically, 20% less, whatever the figure of 20% less than $1,600 in acquiring that customer. Is that what you're saying? Is that it in roundish figures?
It means that I'm willing to spend 1,000 and make 1,200 in cash minimum. If I'm spending $1,000 and making $1,000 in cash, I know I'm actually losing money because there's merchant fees, there's going to be some chargebacks, there's overhead, there's all sorts. So if I'm making that, I'm losing. But if the 20% margin there, it means that worst case I'm probably breaking even, right? And I'm going to collect on the accounts receivable, but I try to do my math on the most dire numbers possible, because that way I know that I'm being very prudent